from Lumpkins from Florida.
Oh yeah, he's popular on our feed.
With the CRB developing a positive correlation to the U.S. dollar, agriculture had great relative strength yesterday, and seeing multi-year highs in volume inflows in the past couple months. Copper structure still intact. Is it safe to say commodities potentially are still in the early stages of developing a secular bull market?
Well, I don't know, but you need to make it all that, right? Lumpkins, you don't need to go all secular bull, secular bear. Like, you're sounding a little wall for me there, Lumpkins. So we're going to downgrade your popularity a little bit. One, CRB index is signaling lower highs. Let's start with that. Two, dollar is still signaling higher lows. Let's also start with that. That similar set trumps anything secular you want to tell your clients about or you about from the long term. Quad 3, good. Quad 4, if it continues to manifest, commodities are going to go from where they go up today to down again, okay? We're going to try to, again, price in Quad 4 within the next 1 or 2 or 3 months, and then you can go buy whatever you want to talk about secular. Secular means, could it be a super long-term thing that I could just tell myself or my clients that I could buy and hold? That's rare. Certainly with these levels of correlation, and again, that thing that you see on your screen, pop it up there just so that everybody knows what Lumpkin's looking at. It might be what he wants to see, right? You know, don't look for what you want to see. Look for what is. Now, the inverse correlation is a very short-term and positive one, and again, it is driven, very well put, you know, due to the metals and to the ag complex. General, you got the correlations you've already shown today against dollars, but that could go away tomorrow. I mean, it's plus 0.44. It's not what you call, you know, negative 0.95 or something like that. So again, I'd say that it's something to think about. By quad 2 of next year, and again, Lumpkins might just want to be, like I had a call with a client yesterday in California who definitely manages more than Lumpkins, and he manages a lot more than probably 90% of our institutional clients. Okay, so this call with, and this guy's good, all right, really good. He didn't go to Yale, but he's almost that good, that kind of good. You know what I mean? You know, blue, we're going to send him a vest, and then he'd look like perfect. So again, he has a duration where he's buying for Q2 of 2020 next year, because it'll take him a month to buy something, right, to get a real position. And he basically is trying to get to the place that Lumpkins was. So maybe Lumpkins is really good, still good. Maybe I just upgraded you again. See, I downgrade and upgrade lumps. I mean, you're there, right? Because by quad 2, you're long commodities again. So the odds of commodities having hit a secular or cyclical or both low in May and June of 2020 is very high, as long as the Fed and the fiscal is committed to what? MMT and dollar devaluation. Because the odds of the dollar, again, don't confuse a trade in the dollar with a trend. The trend is still bearish. So again, that's something to think about too. Again, I have an open mind. I'm going to trade my book accordingly.